Hey guys, what's going on? It's Rekt Capital here. Thanks so much for joining me here in today's video about Bitcoin's current price predicament as it nears a vital monthly resistance. Yesterday, upside wicking beyond 24k even very briefly, very similar to the upside wicking that we saw in the summer of 2022. Let's talk about this and much more in a bit more detail. Subscribe to the channel for more videos like this in the future, and let's dive right in. So Bitcoin overextending right over here beyond this resistance, very similar to this. And the thing about this current price predicament is that Bitcoin is in a range, a macro range between 20k roughly speaking and a psychological support and the 23,400 level. And Bitcoin needs to monthly candle close above 23,400 to confirm a breakout from this range, because otherwise monthly closing below will really just sentence this candle to an upside wick and potential rejection from this resistance here, and just to see Bitcoin further consolidate inside this range, very similar to something like this from a few months back. But one of the things I want to mention is that on Twitter you can find the most recent and up-to-date analysis from me, and yesterday I posted about the possibility of a new lower high forming at this 23,400 monthly resistance, and that Bitcoin needs to clear 24,370 to make a higher high to remove the risk of this lower high forming here. And since then we have actually monthly or at least weekly candle closed but below this 24,370 level, which means that we do have a lower high right over here. But the thing about this lower high, and it continues to be a risk, it continues to act as a diagonal resistance. It was a danger, and it continues to be one. Could be a point of rejection here. But what Bitcoin needs to do right now is to weekly candle close above this diagonal. And that we'll really know this in a few days, but generally speaking, Bitcoin needs to monthly candle close above 23,400. So even though Bitcoin is rejecting from this lower high, monthly candle closing above 23,400 would likely mean that we wouldn't see a stronger rejection from here. So a monthly candle close above that level could mean that we could see some dipping in the short term, but generally a monthly candle close above that level would mean that we could actually break out to eclipse these 24,300 highs. And we have to bear in mind that we're seeing a lot of bullish developments occur from a technical perspective at least. And this is a late December 2022 chart that I shared here, that the RSI was forming a downtrending channel below the previous bear market bottom region. 2015 bear market, from here Bitcoin's RSI rallied to the bull market peak. 2019 here, RSI bear market bottom, and then rally to the very peak of the bull market. And the RSI was preparing for a breakout from this downtrending channel, and it needs to eclipse and reclaim the bear market bottom region. And suffice to say, since then, the green pathway is being followed. We have eclipsed the bear market bottom region right over here, but we haven't quite retested it as a support, and that could happen. And if that does happen, that would be fantastic confirmation of a new bull trend forming. But as we've seen over here, we didn't see any retesting or dipping. Granted, we didn't see any RSI deviation below this bear market bottom region either, but generally speaking, we don't even see retesting of that green area. At the very least, or at most, we could see a higher low form here against this green bear market bottom region. So soon the RSI is going to monthly candle close, and it's a very good price development here, a technical indicator development that the RSI is closing above this green region, back in to this red wedge from where we oscillate from bear market to bull market from bull market top to bear market bottom. And that's really good, because this is good news, because the RSI reclaiming the very bottom of this pattern is going to be a bullish development and just confirming to us the very initial steps of a new nascent bull market. Because whenever Bitcoin is consolidating at these bottom regions, then it tends to lift off into a new bull trend, and it's something to get excited about in the future. But one of the things we need to really take into account, and I've mentioned this in the previous video, is that we're nowhere near close to the macro downtrend at the moment this month. So this month we know that 28k is the price point that represents this macro downtrend, but next month in February is going to be 25k, and with Bitcoin around 23k right now, 25k is a much smaller ask than 28k at this point in time. But generally speaking, as this slanting macro downtrend continues, with each month we're going to see a lower value representing this macro downtrend. So that's about it for the prices when it comes to the macro downtrend. We also need to focus on the time to the halving. Right now, or at least in February, because we're very close to February at this point in time, so I just measured 425 days prior to the halving, and there's still scope for Bitcoin to take a bit more time to reach that macro downtrend, because historically we have broken out beyond this macro downtrend 366 days prior to the halving or 396 days prior to the halving. And right now it's 425 days in February. So it's even more days this January, but January is pretty much in the books right now as we end the month and near into the monthly close. So February is still 425 days away from the halving, which only just gives us a bit more time, technically speaking, for Bitcoin to consolidate, do something with its price action to just stall a bit before really challenging that macro downtrend for a breakout. And in March, 23k, roughly speaking, 23,400 would be the macro downtrend breakout point, which is quite interesting, because 23,400 is the resistance that's plaguing Bitcoin for this current move. So really interesting confluence to see in March, but that's going to be the earliest that we see that breakout. That would be 396 days prior to the halving, a March breakout. April would be around 366 days before the halving. So March, April is what history is suggesting to us. History is suggesting to us that a breakout could occur in March or April. And so how does Bitcoin need to behave going into those months as it tries to buy a bit more time? Does it need to consolidate a bit? Does it need to dip a bit? And this would just be trying to reaffirm itself, its price positioning to gather strength for that next move. So really interesting to watch out for Bitcoin at this point in time. 23,400 is the key resistance. We need to bear in mind that this is a lower high. If Bitcoin manages to close above 23,400, this lower high isn't going to be much of a problem, but close below 23,400 and we're probably going to see a rejection quite similar to this. Would it be that deep? Really important to notice that we are in a range. So intra-range consolidation is going to be within this playground. So it could occur that we could see 20k in a dipping scenario. So this is the range at the moment. Bitcoin is trying to break out from that range, but struggling a bit with this new confluent resistance forming here. But generally, for the confirmation of a new bull market, we have still a bit of a way to go, still a bit more time to enjoy before that breakout confirmation is there. But at the moment, that's all we can say. In any case, that's about it for today's video. Thank you so much for watching today. Subscribe to the channel for more videos like this in the future. And of course, like the video if you enjoyed this one. Subscribe to the Rekt Capital newsletter as well. The price is going up for a monthly and annual subscription on February 6th. So not much more time to go. But if you subscribe today, you'll be able to keep your early bird pricing for as long as you choose to enjoy it. So feel free to check out the link in the description down below. In any case, that's about it. I'm Rekt Capital and I'll speak to you in the next one. Speak to you soon.